For more on Alphabet's results, let's bring in Fast Money friend Gene Munster. Gene, your take on the quarter. The stock is down 8.8% right now after hours.
Melissa, I don't know if Deirdre covered this in her kind of recap from the call, but they did say that there are two headwinds related to FX and the loss of 1 day of leap year. It's going to have a negative impact on the March quarter, but they also said, and this was what really caught my attention, is that the cloud segment is going to have variability. That was the comment, variability quarter to quarter based on when capacity becomes available. It all makes total sense, but when you play it into investors hyper-focused on the near term, what it means for the March quarter in terms of Google Cloud growth, the street's at about 30%. When you talk about variability, it probably means that the numbers should be closer to 27%. So I just want to highlight the stock is really trading on one data point, which we need to start there and just acknowledge, of course, that this is all about Google Cloud. But I think that is largely missing the point. The search business saw a fractional acceleration in growth. They've rolled out from 300 million customers that saw AI overviews to over 1 billion. Remember, that's the big negative here is generative AI and Perplexity going to take away? We're not seeing that yet, but I think that is an impressive. YouTube, 2.5% upside. That was in part driven by some of the election spending, so don't read too much in that. But overall, I put this in general, my money's on that this is an overreaction, what we're seeing here. And then one final piece, Melissa, as Dan was kind of doing some of the setup here, talking about the derivatives relative to this, and the concept that we're shifting to a software-focused AI trade. And I understand that concept around that, but I think there is much more room left for these hardware companies to grow. Again, of course, the 47% increase in capex that Google talked about tonight. They got to run the table. Amazon needs to say something positive about capex. If they say something negative, then all bets off. But my suspicion is that they're going to also be spending like drunken sailors, and I think that this AI hardware trade still has another year or 2 years left in it.
I know those are real issues, but FX and the leap year thing really sound like lame excuses. I mean, Google's got a calendar. We know that, so they know that leap year is not. Anyway,
I agree. It's weak.
Right, it's kind of weak. Putting that aside, though, in terms of the capex spend, as an investor, are you confident that additional spend, there's going to be a return on that? I mean, I think that is a critical issue here. A ramp of 47%, that's major. And what are we getting out of it? Yeah,
it's major. Just some quick context to that. They generated this year $72 billion in cash. They've got $97 billion in cash. They're talking about taking their capex from $51 billion to $75 billion. They've got plenty of money to spend, and I understand the concept of wanting to see a return on this, but they've got the money to invest. And then, how do we see this forward? And unfortunately, I can't put a stake in the ground and say that all this is going to have this incredible outcome. I believe it will for all the virtues around AI, but that's going to be a question that's going to be nagging. I would say that where are they spending that more specifically on the infrastructure? Sundar said that this year is going to be the most innovative year in search. Every year should be incrementally more innovative, of course. But I think that speaks to still this underlying question is the Google search results is still pretty junky. It's pretty messy. It's not as clean as Perplexity by any measure or GPT. And I think they need to really overhaul that in the next year, 2 years, while not really jeopardizing the golden goose around their search business. They still got to thread the needle here, still feel confident they can do it, but there's a big task ahead of them.
Gene, it's Karen. Thanks so much for being on. Just to clarify something for you, were you saying they were not capacity constrained in Q4, but would be in Q1?
What I was saying was that just there was no capacity issues there in Q1. There's just variability in saying that. I guess that is a form of capacity is that they just don't have some of the data centers up and running. So yes, I guess that is a form of. In an indirect way, saying that they're capacity constrained. She did not explicitly say that they got too much demand, but she said that based on availability of hardware, when these data centers are up and running, is going to have an impact. And that's understandable, but I don't think investors are going to really like that tomorrow. Again, I think this is an overreaction. I think the stock should be flattish on these results versus down 8%.